What is going on, everybody? Guys, I wanted to make it simple for you. I want to show you what long and short are, what they look like, so that you get a little bit more comfortable with doing futures trading. Now, I want to recommend when you do this to at first test with just a couple of dollars to see how well you are going to do. And I would also suggest that you don't use any more than, say, a 5x leverage position. If you use higher leverage position, that takes on a lot more risk. To give you an example, if you use, say, 30x leverage, then the price of Bitcoin can only go up and down by about $1,000 before you get liquidated, and you'd be surprised how quickly that can happen. If it's 20x and it's about 2,000, 1,500, and you'd be surprised how quickly you get liquidated. You just saw a catastrophic event going all the way down to about 10x leverage. 10x leverage got liquidated like crazy in this last little bit. So I'm going to show you one of the safer ways, and especially if you consider that if you're in this for the long term and you're waiting for this market to go up, then the best thing that you can do is use a lower leverage, give yourself a lot of opportunity to take on with your money a little bit more risk. This market should be going up. We might have a dip, but what you could do with these positions is try to figure it out. But let me show you what long and short are, and then you can make the determination for yourself what's the best move for you. So that being said, we're going to use MEXC because MEXC is my preferred trading platform. Now, if you haven't already, please hit the like button, leave a comment down below letting me know how you feel about futures trading, and use MEXC for all of your trading. Fair Desk, if you want to, BingX, any one of these support in the description down below. But when you look at this screen, basically what we're looking at is you have an open long on the left-hand side and you have an open short. This right here will tell you how much money right now. I have $1.14 on that. I've already got some plays that are in, but let's say we want to risk our dollar, right? We're going to move that all the way up here. We're going to risk $5. We're going to put it into a position. We're going to hit open long, and it will open a long position at this market price. The market price right now is right here, 0.758. And you can see that right there. This is your real-time fair price. The market price right here is not always the fair price. So pay attention to these two. Look for those to be in sequence. They're not always in sequence. For example, if you buy right now at 0.757 and the real-time fair price is at 0.758, you're actually in a profit by 0.001 because there's a margin, and each one of these has a margin that's allowable. So that's for something that's something for a different time. But we're just going to say that we're buying at this level. So we do this, we buy, and then you're selling, and when you're selling, you're going to sell at the fair market value. So bear that in mind. So we're going to hit that. We're just going to open a long position right there, and boom, done. Now, what is a long? A long means that you buy shares at market price and then you sell it for a profit. A short means that you sell the shares at market price and then you buy them at a lower price later. Long, you're just holding on to what it is that you bought. And a short, you're selling it and hoping to buy it again later. Now, the way that works out is very simple. Let's just say that you're using 100 shares at $10 per share. For whatever it is that you're doing, that is 100 times $10 means you're putting $1,000 into it. Now, if you use 5x leverage, that means that you're borrowing $5,000 on a long and you're repaying it plus a small fee, and you keep the profits. And what that means is, let's say that you've got $1,000 in it and you use 5x leverage, which means that you're borrowing 5,000. Let's say that it goes up to $11. Well, that means you have 100 times 11, which is 1,100, times 5 means it's 5,500, which means that you reaped a profit of about $500. Now, the fees are nominal for this, 0.02 taker fee, maker fee, something like that. So it's only going to be a couple of bucks, but then you would pay that, and then you would keep the profit from that. So you would keep your original investment of $1,000, and then you would keep the extra $500 or so dollars. So you would have $1,500 at the end of this. That is a gigantic move and a gigantic benefit. Now, the other part is you can risk it all. And of course, if the price goes the wrong direction, you could get liquidated, which means that you would lose your $1,000. So if you're risk averse, the best thing for you to do is just to stick with spot trading and don't take that risk. However, it should be noted that most of the people in the market that make the gigantic amounts of money do use leveraged positions in order to increase their positions. And they do go very, very short with a lot of money so that they don't get liquidated. But if you go short, What happens when you short something is you're betting on the price to go down. So let's say again, you have 100 shares at $10. That means you got 1,000. You're using 5x leverage, which means that you're selling. You're taking the money that you got from the lender who's giving you the position on a longer or short. And by the way, when you're doing this, it's automatically done by proxy just here because your risk position is just your available money. Okay. Just so everybody understands that. So you're borrowing $5,000 from this provider, and then you're selling the crypto immediately for $5,000. So if you bought this at $10 and you sell it all for $5,000, that means you got $5,000 worth of this crypto. Now, if the price of it goes down to about $9, then that means that you go buy it back. And now when you buy it back, you're going to buy it for $4,500. You're going to get the same number you're going to get the same number of shares at $1 less. And with 5x leverage, that means that it's going to be $4,500. So you've made $500 the same way if it had gone to 11 on a long, 9 on a short. So that means that you're still making the same $500. The question always is, and it never changes, is can you make the right determination on which direction that it's going to go? If you make that determination, then you will always win. Now, crypto is a volatile market, rife with derivatives traders, and derivatives are futures traders that are absolutely trying to wreck you in the market, which is why I recommend, even if you're using Bitcoin, don't go any higher than 10x leverage. And if you need help on this, there are plenty of things that can help you. Might I suggest High IQ, which is also in the description down below. If you use my code, which is down there as well, then you'll get about 25% off on your purchase. And it pays for itself very, very, very rapidly. And you can use a lot of different positions, a lot of different opportunity. But guys, let me know what you think in the comments down below. This is the long and the short of it. We'll talk to you again very, very soon.